Hello there traders, hello fellow champions. Welcome to another video of Trading for a Living Forex Champion series. So I know it's been a while since I posted a new video. However, this video is all about uh, market structure and naked chart trading, and how naked chart trading will help you, or one of the best ways in order for you to have a clear decision making, and at the same time help you be better when it comes to your entries. So without further ado, I'll be sharing with you one of the best ways how to approach the market through what? Through price action, market structure, and candlestick confirmations. So let's get straight to the charts. All right. So what do we have here? All right. Before anything else, I want to share with you guys what are the things that I always ask myself when I want to enter a specific trade. So I'll be sharing with you some questions that you can also ask yourself before you enter a certain trade. So what are these questions? All right. What are these questions? So first thing, since we're dealing with, again, this approach uh, when it comes to naked chart trading, of course, it's all about price action plus market structure. All right. You have to make sure that you already have a good foundation when it comes to price action and market structure. So if in case you still don't know what market structure is, for the sake of those who have just subscribed to my channel, or you're still a newbie or a beginner trader, again, just a quick recap on what is market structure when it comes to trading. So I'll be sharing with you some slides. All right. Alright, so just a quick recap for the sake of those beginner traders, or someone who are watching this video that have totally doesn't have any knowledge or background in trading. So when we talk about market structure, right, we only have three types of market structure. We have what? We have the bullish or the uptrend, bearish or downtrend, and we also have the range sideways, or what we call as a consolidation market. So for a bullish or uptrend market, in order for us to read the market structure, definitely this is an ideal market structure for a bullish uptrend. So how we can interpret this movement? So coming from a low, we have a high, and then suddenly the market or the price formed a higher low. Higher low means a low higher than the previous low. Alright? And then suddenly the price moved up higher, or what we call as a higher high, which means it is a higher high your previous high level, and so on and so forth. So ideally this is what? An ideal or perfect bullish uptrend market, right? So if there's a bullish uptrend market, in contrary, there is what? A bearish or downtrend market. So again, guys, this is just a recall for those who are still new in trading, or forex trading in particular. So again, for a bearish or downtrend market, we have a high coming from a high, and then suddenly the price made or formed a lower low, which is uh, a low level lower than your previous level. And then after that, the price formed a lower high, which means a high, or a moved upward but lower than your previous high level, and so on and so forth. So this is an ideal bearish or downtrend market. So that is how we read market structure. It might look or it might seem simple. However, majority of beginner traders often neglect this concept because they always tend to what? Tend to jump straight to a more advanced stuff, being hyped by those people who are in social media, or even scammers. So again, trading shouldn't be complicated. Again, guys, sometimes these simple things being neglected are the ones that will help you become consistently and a profitable trader. So you should have a good foundation first prior jumping straight into a more advanced stuff when it comes to forex trading. Again, I always say this to my students, uh, forex trading is a skill. It is honed through time. So there's no magic strategy, holy grail strategy when it comes to trading. You have to practice, you have to backtest, and you have to have a good trading psychology that includes discipline, patience, and proper risk management. All right. So the third is we have the range, sideways, or consolidation market. Right. So normally this implies that a market doesn't have a clear direction whether it is going higher or going lower. So normally it only reacts or bounces to a certain specific level like this low, and then reacted to the same almost same level of this previous low or even the same previous high. So which means the price moves in what? In a range bound behavior. All right. So there's no clear direction yet whether the price will go uptrend or downtrend. So these are the three uh, market structure in forex trading. We have the bullish or uptrend, bearish or downtrend, and last is the range, sideways or consolidation market. All right. So back to the charts. Again, why am I explaining the market structure when it comes to naked chart trading? Again, guys, market structure and price action is actually a foundation when it comes to doing any naked chart trading, because it's all about the price. It's all about the price that we're analyzing, as well as the structure and candlestick formations for our entries. So these three, okay, I will just add the other one, right? So this is the foundation of a good naked chart trader. Right. So what are the questions that I normally ask myself prior to entering a trade? So first thing, I always ask myself, right, what is the structure or trend of the market? So uh, it normally consists of three levels. Mainly, am I at the support? Am I at the resistance? Am I at the middle of these significant levels? Or am I still approaching the market? So I normally ask this question before I do a certain entry for my trade. So what is the structure of the market overall on a higher time frame? And where am I at this structure? Am I already at the key significant support? Am I already at the key significant resistance? Am I still at the middle of these two levels, or am I now approaching these key significant levels? So first things first, you have to ask this very important question to yourself through the analysis of the current price. Second thing is, when you have known already where you are at the current price, again, you have to make sure you have a candlestick confirmation, right? So once you have known that you're already at a specific key significant level or zone, or you're already at the zone that you are waiting for, then you must look for what? Candlestick confirmation, right? And then after that, after you have this candlestick confirmation at your higher time frame, you have to make sure what? Go to uh, again, ask yourself, uh, am I ready now to go to the lower time frame for my entry and confirmation? So normally these are the three questions I always ask myself prior to entering a specific trade. All right. And lastly, sorry, I can still add one more. Right. You should always know how much is your risk per trade. All right. So that is a different topic. So if you haven't watched my previous video when it comes to risk management or how to calculate lot size, then go check out my previous videos or the past videos for that specific topic. Again, that was in a Tagalog and English language. However, I'll be making another video for those only English speaking viewers or subscribers. So again, just to recall, these are the common questions or the common things I always ask myself whenever I place a certain trade. All right. So, what is the structure or trend of the market first, and then where am I at this level? Am I at the support, resistance? Am I at the middle or approaching? And then next, do I have any candlestick confirmation like any rejections, selling or buying pressure? The basic uh, candlestick patterns like pin bar, engulfing candles, those kind of stuff. And am I ready now to go to a lower time frame for my entry as confirmation? And how much will be my risk whenever I will take a certain trade? All right. So again, this is the foundation for your naked chart trading. You don't need any indicators for you to decide. All right. So what I'm trying to say is the cleaner the chart is, uh, the cleaner the chart is, the clearer your decision making will be, because you're only basing your decisions uh, on price action and market structure. So it's all about the price, right? So if we will apply this to our trading for now, again, if we're going to analyze this pair, Euro Kiwi or Euro NZD. So again, first, what we go to a higher time frame to ask ourselves, where are we at the current market structure? But before that, what is the current structure of the market? So if we're going to analyze this market, we can simply see that the price came from an impulse move down, then make uh, a correction from a high, low, and then what? Lower high, then lower low, lower high, lower low, sorry, right? And then what? Another lower high, lower low, lower high, lo sorry, lower low, all right, and then what? Lower high, and then what? Higher low. We can see here that what? The price made, I'll just change this color to what? The price formed a higher low, which means at this stage or this point, the momentum is shifting now going or towards the upside or going to an uptrend shifting of the market. So the price definitely made a move, an impulse going up. So what do we expect? So after a move up coming from this higher low, definitely the price, we can expect the price to make another what? Higher low. All right. But before that, I will show you another trick in order for you to see what are the key significant levels of this price level. All right. So I'm just going to delete this. All right. So we know now that the price came from a impulse move up and then form a higher low and then an impulse, strong impulse going up. So that is our higher high. So definitely we expect the market to have a correction for a or retracement for a lower for a higher and again another higher low, right? So another trick that we can do is go to a line chart, right? Then we can clearly see the market structure without the wicks, right? Where is our key significant level here? Where most likely the price would react given this level of price. So if I would draw a key significant level or zone, I would put it here, right? So how do we know if the price or level or zone is a significant uh, level? As long as the price reacted to that level or zone twice or more, we can say that that specific level or zone is a significant level or zone. So in this case, I saw here through changing my candlestick chart to a line chart, simple as that, in order to eliminate the wicks, because we all know that this line chart only represents the body or the closing levels of the candlestick, right? So these are the closing levels. So I have here a what? A reaction here, a reaction here, a reaction here, a reaction here. So definitely I can say that this is what? A key significant level or zone for me. What else? I also have here a key significant level or zone. Alright? Why is that? Because the price reacted here 1, 2, 3, 4. So that alone already indicated that these are my key significant level or zone. So as per our current previous analysis, going back to our candlestick chart, so we already know that the price made a higher low initially and then went up for another impulse going up, and then we expect the market to form another higher low. So a move down or a correction or retracement going down. So the first question we're asking, right? What is the current market structure of the market? So we all know that at this point, the price shifted its momentum going up. So we can say that after this impulse move up, we want the price to go down for a correction going down. So again, I'm expecting the price to go down. So the second question, where am I at the current market structure? Am I at the horizontal level or zone, resistance level or zone? Am I at the middle, or am I still approaching this key significant level or zones? Again, we already have our resistance here, key significant resistance, right? And we already have our key significant support. Why is it that support? Because the market, what? This was once a support, now becomes a resistance, and then suddenly got broken again, and then continuously this one will be our support again. All right, coming from this resistance level, we all know that this was once a support, got broken, and then becomes the new resistance, and then suddenly got broken again. So definitely this level or zone becomes our key significant support again. All right, so we expect the market to move down. So where am I at the current market structure or level? I am now at the resistance level or zone. All right. So the third question is there any candlestick confirmation that I can go down to a lower time frame for my entry? So is there any what? Any indication that the market is going down? So we can see here rejections or selling pressure of the price. We have here one, how many? Oh, sorry, two, three. So we can say that this is a strong level of resistance. Definitely the price reacted here and showed what? Selling pressure from the bears, meaning there are a lot of sellers here wanting the price or wanting the market to push lower. All right. So once I have known this confirmations that the price wants to go down, I can go down to a lower time frame now for my optimal entry. Again, the reason we're going to a lower time frame is for us to improve our risk to reward ratio, because it is very impractical to place the trade on a daily time frame considering the risk to reward ratio. If I'm going to place the trade now for a sell position, my risk to reward ratio will be short position, right? Only 1:1, almost 1:1, right? So for me, I don't like this setup and I don't like this risk to reward ratio. I want to further improve my risk to reward ratio through tightening my stop loss level. All right. So that's the reason I'm going now to a lower time frame for a much better entry and much tighter stop loss. So that improves my what? Risk to reward ratio in the trading. So what is this risk to reward ratio? If ever I'm going to risk $100, definitely through this setup, I can only gain almost $100 as well. So it's just 1:1 risk to reward ratio. But if I go down to a much lower time frame, definitely it will help me improve through detailing this candlestick formation to a more candlestick uh, what detail. So that definitely gives me more room for my stop loss to be improved, and that reflected also it will help me improve as well my risk to reward ratio. So I'm going now to a much lower time frame because I know where am I at the current price. I am at the resistance level or zone. And then I saw candlestick formations, which implies selling pressure or rejections to this key significant resistance level. So I will now go down to a much lower time frame, let's say to an hour time frame. So what do we have here? Again, we apply our market structure concept, right? So if we would analyze this current situation of the price or behavior, we can see that the price from a lower level, the price moves in an impulse and then a correction, forming another higher what higher low, higher high, higher low, sorry, and then higher high, and then suddenly the price made a higher low still, but formed a lower uh sorry a lower high. So after that, the price moved again to form a what a lower low. So which means at this point, right, when the price broke this level of low and created a new lower low, we all know that the price now has shifted its momentum going down. So what do we expect? All right, we can expect now the market to move for a correction or retracement going up, to form again another lower high. So we expect the market to move up at this level to form a lower a lower high. So that will be our entry if ever we want to to place a trade on this pair for a short going where? Going at this level. Alright, again, we all know that we already have our key significant level or zones at our higher time frame. So we are just going to a lower time frame for our optimal entry and improving our risk to reward ratio. Initially, if we're going to place the trade right away at the daily time frame, we only have 1:1 risk to reward ratio. So that for me is a big no-no, because for me, whenever I place a trade, at least 1:3 risk to reward ratio is a better entry. All right. So reading the market structure, we all know and we expect the price to move for a correction going up for our entry prior for the price to move down. So coming from a high, formed a a low, and then it fails to make another higher high. Definitely it formed a lower high and then break this low, forming a a lower low, lower than this low. Then we expect the price to move, as I've said, move up for a correction, forming another lower high, lower than this previous high, before it go down to this level. Again, we're just reading market structure and price action. So how can we say that the price will move up now? We can say that at this point, going to our line chart, right, we can say that there is a key significant level here, right? So we can see that the price is now reacting at this level, right? We see these rejections or buying pressure. So Can we say that this is our entry? We can say yes. However, again, we can look to our line chart again to read the market structure, uh, removing all the noises from the wicks, right? So, but for me, I can consider this level as my entry, as this is the nearest key significant level that the price would react. Alright, we have one touch here, another reaction, reaction, and then we expect the price to at least react to this level, or if not, another level here. But we expect the price what? To form a candlestick formation of selling pressure for our optimal entry. So going back to our candlestick chart, so if I'm going to place a trade, alright, I will be placing a sell limit where a short position here, right? Or I can extend what? My stop loss here. Where is my take profit? My take profit will be at the daily level key significant support right here. So we can say now that our risk to reward ratio becomes what? 1:3. Alright, so coming from a daily of a trade of 1:1, now I have improved my risk to reward ratio to 1:3, which means if I would risk $100, definitely I would gain 3 times of that, which is around $300. So again, as I've said, my rule of thumb is at least 1:3 is my risk to reward ratio whenever I place a trade. So again, I'm only trading using market structure and price action. Alright, so that is how I read market structure. So I'm just repeating the same process as what I have did at the higher time frame and applying it to the lower time frame for my entry. So again, just a recap, right? So we have seen the market going down, forming a low, lower high, low, lower low, lower high, lower low, lower high. And then at this point, the market formed a higher low and then a strong impulse going up. So we expect the markets for a correction or retracement, forming again another higher low. So that's why uh, we have made our key significant level here as a support through changing our chart to line chart to remove all the noises from the wicks. Again, this line chart represents the closing of the candles. So I'm expecting the market to react to this level going down as a correction, forming another higher low, right? And then, since we already have known our key significant level or zones for our resistance and support from here and here, we can now what? Ask ourselves, where are we at the current price? So we have seen that the price now reacted to our key significant level of resistance. That provided me an indication that I can now look for candlestick formations of a selling pressure right here. We have a lot of selling pressure here or rejections that the price wants to go down. And then after that, I went to a lower time frame again to read the market structure again for my optimal entry. Right? So analyzing this portion of the market, I can see that the price from a low formed a high and then a higher low, higher high, higher low, higher high, and then suddenly again another higher low. But at this point, the market what failed to go beyond here, forming a new higher high, but instead formed what? A lower high, which implies that the market is shifting its momentum going down. So once the price broke this level, this low formed a new lower low. That indicates what? A shifting of momentum going down. So how can I find an entry? Again, a high, low, lower high, and then lower low. So I expect the market to form again another lower high. All right. Again, another what? Lower high. So how can I find a key significant level or zone for my entries? Right. So again, changing my chart to a line chart and looking for key significant level or zones. Uh, Removing all the noises from the wicks, I can see key significant level of zone here through what? Reaction of the price multiple times, right? So 1, 2, 3. So this is a key significant level or zone. So I can set that as my entry. So if I am very careful of my trade, I will not place an entry right away, but instead wait for what? Wait for the price to react here and wait for candlestick formations such as a selling pressure candle or rejections, which implies that the price is ready now to go down to my daily time frame target, right? But for the simplicity's sake, again, if I'm going to place a trade here, I would want the market to react to this level of my key significant level and then wait for candlestick formations such as like this, right? Right? This selling pressure candle. So if I would see a candle formation like this in this level, definitely I can place a trade for a short position. All right. So again, guys, I didn't use any indicators to analyze this chart. I didn't use any moving averages, RSI, stochastic, MACD, or anything of that sort in order for me to place a trade or analyze for an entry. Because I'm only reading market structure and what? Price action. So for naked chart trading, again, you can see how clean the chart is, how simple the analysis is. However, for me, the simpler the better because it helps me what? It helps me make my decision straightforward and clear. All right? I don't have to wait for 4 or 3 moving averages or 3 or 4 indicators for me to decide a certain trade. I only read the market behavior, the price action, and the overall market structure itself. All right? So, I hope you understand this concept, how naked chart trading will help you be a better trader. Again, guys, that is why this is called a price chart. You only have to analyze it and interpret price itself. You don't have to use any indicators. Again, I have nothing against those traders or people who uses indicators. Again, we all have different style of trading. We all have different level of learning. But for me and to all my students as well, I'm only teaching price action because I know that is what trading is all about. It's all about the price, not the indicators. Again, majority of indicators are lagging. When it comes to when we say about lagging, uh, indicators are formed through past data formed by the candlestick formations. All right. So again, guys, I hope you have learned something on this video when it comes to naked chart trading and price action using market structure, price action, and candlestick formation only. So I am a firm believer that the simpler the analysis is, the simpler your approach to the market is, the better trader you will be, and the more consistent and profitable you will be. All right. So you don't have any clutter in your charts. I have so much space now, much cleaner chart, and what else? I'm only reading the price itself. I have made my analysis even simpler, even those newbies or beginner traders would understand. Again, if you are still unfamiliar with market structure, uh, go back to my previous videos. And if you are a non-Filipino, again, I will be making another video when it comes to market structure. So it is as simple as reading the market structure itself and the price action in order for you to have a straightforward decision making. Alright? You don't have to wait for 1, 2, 3, 4 indications that you're going to place a buy or sell. Again, I know from the start that I'm going to sell. Why? Where am I at the price? Where am I at the market? I am at the key significant resistance. Whenever we are at the resistance level, what we can do is always look for a sell opportunity. On the contrary, whenever we are at the key significant support level or zone, we always look for what? A buy opportunity. So that makes me a better trader because the decision making is simple and my analysis is simple. Guys, trading shouldn't be complicated. I don't care those people saying that my analysis is very simple. Guys, you know, I'm a strong believer that the simpler your your analysis is, the better trader you will be. All right. So those people who flexes their analysis through cluttering their charts with a lot of indicators, those are just for me decorative tools. Again, it is just based on my opinion. I have nothing against those people who use it, but then again, we all have different approach in the market. We all have different level of skill and learning in forex trading. So again, thank you very much. Thank you to all those people who supported this channel. Again, if you are new to this channel, you may want to subscribe, hit that notification bell so that you are updated every time I posted a new video. And I would just like to give a big shout out to my VIP students, to my VIP champion students, and to all those who already register at the TFP Forex Bootcamp. Guys, that will be tomorrow, and I'm very much excited to see these people who really want to learn and stepping up their game in terms of trading. So again, that is it for today's video. I hope you have learned a lot, and I'll be following up with another video on this approach, naked chart trading, using just market structure and price action. Again, my goal is to help you guys have a strong foundation when it comes to analyzing the charts through price action and market structure. So again, I will be giving more examples on the next videos and giving you more ideas on how to approach the market. So again, the level of learning or the horizon of learning in forex trading is very wide. That is why for me, you should always have a proper guidance because we all know I myself was a beginner as well back a very long time ago. So I got a lot of information, but suddenly I don't know where to start, and I want to try a lot of strategies. So there are a lot of strategies out there. However, we have to know that what is the strategy for me really, and I should only focusing on one strategy and be better at it, not constantly changing strategies, but what tweaking the strategy and improving it every time I make a mistake. So that will help you be a better forex trader, not constantly changing strategies. You will just be circling around this what we call as the cycle of doom, wherein every time you lose a couple of trades, you change another strategy. So guys, you will not be profitable and be a better trader in the long run if you keep doing those kind of habits. So again, guys, stick to one strategy, be good at it, improve, always backtest. You should backtest 100 times, guys. So I have done that. trading, practice, practice, practice. Alright, guys, there's no shortcut in Forex trading. Again, this is a skill. It is honed through time. So don't rush, learn the proper approach, learn proper risk management, learn the discipline, and always make sure that your aim is to learn the process. Because if you master the process, definitely the profit will follow. All right. So again, thank you very much. Thank you to all those supporters, and see you again to my next video. Bye bye.